Dylan, how are you today?
I've never been better. I've never been better. Pleasure to see you. It was real nice to have you in my hometown of Milan a week ago. I hope you had good travels. I don't know. Did you make it home? You look like you're in one piece. You survived the flying.
I'm feeling good. I'm in one piece. Had an amazing trip to your adopted to the city that has adopted Dylan Radigan, Milan,
Yes. Yeah.
and we had some fun meals and a great time walking around the city, and spent a couple more days in Italy. And I'm ready. I'm back, baby. Let's go.
It's sort of interesting because I know we got a different topic, but the live trading event that you did was on the same, was with 24 hours after the B-2 bombing in Iran of the U.S. military, which again, it sort of was one of the greatest validations of your never-ending hypothesis that nobody knows anything. Because for sure, if you told anybody that the U.S. is going to do direct military intervention as an act of war inside the Iran, you would for sure run some lock limit here, some lock limit there, oil here, futures there. Nothing. It was unbelievable.
Yeah, it's it's really incredible, and you know, it's a hard concept for people to grasp, especially people that aren't in this business. But after you've been around the block a few times, you grasp it pretty quickly.
Well, why do you think that? I mean, because the reference you used when you were conducting the live trading event was the market response to the first televised war in '91 with the Kuwait situation, and then fast forward whatever it's been, 30 odd years since then, and the market indifferent.
Well, 34 years later, the market response is exactly the same. In 1991, which I think Desert Storm was 1991, the U.S. invades, and it's the first televised war, and we all thought the market was crashing. When I believe it was a Friday afternoon, and on Monday we thought it was crashing. It was either Thursday to Friday or Friday to Monday, but you know, the expectations were the initial response would be the market would open down limit, and it opened up limit. It's so insane, that it was at that moment that I realized, okay, that was 34 years ago. And I'm like, I'm never falling for this again. I'm never, ever falling into this trap ever again. You want to tell me, I've been since that date in early 91, I've been telling people I don't care if I told you what the Fed was going to do. I don't care if I told you what the news was, what the earnings were. You
Jobs
wouldn't
report.
know what to do. If you had tomorrow's paper, except for the closing prices, but you knew every single bit of information, it wouldn't make a damn bit of freaking difference. And that's where we are today. It doesn't make a damn bit of difference.
And so the other thing that struck me, other than that first aspect, was sort of the scale. When you do these events, and I've been able to go do a handful, like four
Yeah,
or five
sure.
of them over the years, but when you do these events, they're actually at an extremely high professional quality. You have, I mean, the venue that you had in Milan is a venue that where some of the biggest rock and roll bands in the world perform. It's one of the most
Yeah.
famous dance clubs in Milan, a beautiful space. I know the other spaces you go to in London or in Texas or DC or California, or obviously in Chicago. Very big, very, not just big, very professional, very high quality spaces. And very high performance technology and all.
Sure.
I guess what I'm getting at is you not so much you, the company invests a tremendous amount of resources. These are not cheap bookings to book the rooms. It's not cheap to fly everybody around the world. It's not cheap to staff them and the crews and all the things that come, all the overhead that comes with doing live events. And the company doesn't charge for tickets.
No.
The company doesn't charge a subscription for the feed of content, whether it's you and me talking or you and Tony or the
No.
girls, Liz and Jenny, what never ends. What's the logic behind investing such a significant number of a significant level of resources in both live events and streaming content and just giving it away? What is that? I mean, the obvious thing is it's marketing, right? Like we want to get customers for the brokerage, and we want to have people. That's kind of a stupid question on my part, but not everybody gives away as much as the company. It's not about giving it away. Not there's not another brokerage, and you're not a CEO anymore, I suppose. But there's not another brokerage executive, and then when you were brokerage CEO for many years, and you're a senior executive at a brokerage now for forever, that is so directly invested in you allocating the time to shake hands and do all the sort of the holding, kissing babies, and all that stuff. Why have you invested so much of yourself, and why have you recommended that your companies invest so money of their resources in giving this away? And it sounds like a little bit of a pandering question. I feel a little silly asking it, but it
Yeah.
did strike me that that there's a lot of resources that go into this.
There's a, you know, the marketing is, there's a lot of great ideas out there. You know this, Dylan. There's a lot of really smart people, and there's a lot of amazing ideas and amazing technology and amazing businesses and all this. But the success rate is incredibly low. And I don't care how smart you are, and I don't care how great your product is, and I don't care about any of that stuff. The difference between um, being successful and not being successful. It's almost like if you're a professional baseball player, the difference between, hitting 310 and going into the Hall of Fame and hitting 260 and just being another name in the history books, is a couple of bloop singles to right field. And those aren't by accident. Those are, those are earned. And whether it's, beating out a slow grounder, whether it's hustling on a different kind of play, whatever it is, um, your ability to differentiate yourself in business, like in anything else, is something that is remarkably difficult, because there's literally millions and millions of businesses, and the number of success stories where you get to be, you build something that's, let's say, $1 billion plus or $100 million plus. I mean, you know how difficult it is. And so, one of the challenges is, how do I market my product? And to differentiate yourself in the marketing world is so hard. And especially, I mean, marketing is something that you can easily fake, meaning that, some people think, oh, we're great marketers. No, I doubt it. Most of the time, I doubt it. There aren't that many great marketers out there. And, our expertise was on the know-how side of the financial world, the trading, we knew how the sausage was made, but we didn't know how to sell the sausage.
Mm-hmm.
So one of the things that we um, focused on was to kind of do, we're like, listen, we don't think we can compete in a traditional marketing world, so let's create our own marketing world. And to do that, what we decided right from the start, this is not something that I decided to do in 2025. This is something I decided to do in 2000 when we first built Thinkorswim. Was, I'm going to go on the road and, almost like a politician in a certain way,
No, I
and
was very congressional with all the
yeah,
handshake and the
yeah,
baby.
and I'm going to be like, listen, I'm going to be everywhere. I'm going to be like poop. Okay, I'm going to literally be everywhere, and so I'm going to build a model based on goodwill. And people said, well, that may work fine if you're running for Congress, but that doesn't work in the world of finance or the world of business. There's no such thing as goodwill. I remember distinctly people just telling me that, Tom, this model is insane. It just won't work. And I'm like, okay, well, thank you for your help. I'm not asking for your opinion. I'm not asking for help. And we decided to build a goodwill model, which essentially is real simply put, it's, I will tell you, Dylan Radigan, everything I know about trading and everything I know about the world of finance. And you could think I'm full of shit. You could think I'm a freaking genius. I don't care. But I'm going to be honest with you, and I'm going to tell you everything I know. And I have spent, 20 some odd years already. Now I've spent 45 years doing this. And it's hard to find people. We used to have people that would be like, can we just pay to sit on your trade desk? This is back in the 80s. Can we sit on your floor? I'll tell you one of my craziest stories. There's a guy that runs one of the largest high frequency firms in the world, Jump Securities. and I'm not going to mention his name, but he's the CEO founder, one of the CEO's founders. Anyway, he's a billionaire now. Amazing character. When he was like 20 years old, he said, "Guys," he knocked on our door and said, "Listen, I want to learn this business. Can I sit on your floor? Can I just watch your
Just
programmer?"
sit in the chair next to you and watch your screen,
Yeah,
basically.
not even me. He's like, "Can I just sit next to this guy over here?" He didn't even know who he was. He's like, he was program trading for us. And he's like, which means we're doing our baskets. And he goes, "Can I just sit next to him? And I promise I won't, I don't have any money or anything like that. I won't take any of your ideas. I just need to learn the business and nobody will teach me." And we're like, "All right, kid, whatever." And now he's a billionaire. I mean, it's just, it's one of the wildest stories ever. And he's built one of the biggest firms in the world. And he's never forgotten us. Like, he's like, we're still, friends to this day. And it's crazy. But it's that was like the start of Goodwill for us. I didn't even know what that meant then. But since we built Thinkorswim and then obviously onto Tasty even more so, it's always been about marketing through Goodwill, which is very simply put, I'll I'll help you however I can. And I don't want a dime. But if you're gonna be in this business, you're gonna trade, use our software. That's the trade-off. That's fair. And you know what I found is that people are really good. People are good. If you give them something and you're real, then they will give you something. And it's been a very fair um, relationship for now going on the last 25 years. 10 at Thinkorswim and 15 at Tasty.
So that anecdote is something that there's been what I'm thinking when I listen. There's sort of two kinds of relationships in the world: transactional relationships. I'm going to
Yep.
give you this if you give me this. I'm going to sell you a hamburger. You're going to give me $10. I'm going to tell you I'm going to, it could be favor trading, financial, whatever it is. And then there's what I'll call transformational relationships, where I share a piece of information or an insight with you,
Yeah.
and it changes the way that you view the world. Or you share some information with me, and because you share that information or that knowledge or that experience with me, it alters how I see the world naturally from just having absorbed whatever you've offered me. So it's not a transaction, it's a transformation. And most of the business world and most of even the personal and social world is transactional relationships. I like the way I'll do something for you, you can do something for me, whatever. But the most powerful relationships are the transformational relationships. The most powerful politicians are transformational speakers, not transactional speakers. The most powerful brands are the transformational brands.
I would agree. I would agree with you, although there are a few weird anomalies, but yeah, sure.
No, of course. And listen, the vast majority of business makes plenty of money doing transactions. It's not, I'm not suggesting that the transactional foundation is not what this is about. I'm just sort of observing that like your offering is more of a transformational offering, which is I will do everything I can to transform the way that you understand money and trading. Because I'm able to offer you access to that information to help you yourself realize your transformation, you then will naturally want to use the same tools that I'm already using. Because if I can bring you if I can
Yeah.
transform understanding to what it is, to how I view the world being, you or the Tasty methodology, once
Yeah.
I come to that sort of worldview, I'm naturally going to want to use your infrastructure.
Yeah. That's exactly it. The only thing is, it is when you talk about businesses and you want to talk about like the scale of building businesses and things like that, the amount of people and businesses that have been successful in using this approach or who have even tried is minuscule. Like it's a fraction of 1%. Like it's not, this is not standard. This is not a standard playbook at all. Most businesses, and if you went down the list of the top 100 biggest businesses in the world, none of them have taken this approach. This is not how you build $1 trillion business. I mean, this is Mark Zuckerberg is not answering.
The ultimate transactionalist.
Yeah, I mean, Elon Musk is not answering customer emails. I mean, to a certain extent, Steve Jobs actually did, but
Mm-hmm.
really look at the powers that be, this is not the way that they run, businesses. It's not the in the financial sector. I doubt that Charles Schwab or Thomas Pettifree would respond to would help you out with a vertical spread. I don't even know who the CEO of I don't know the CEO of even who of E-Trade even is right now, but if you wrote to Vlad at Robinhood, I doubt you'd get a response on how to do an iron condor. So I don't think that that this is standard practice at all, and I don't think that anybody else in the world of finance even does anything like this.
And so then at the other end of the spectrum, outside of sort of the business world, whether at any
Yeah.
size, the most sort of the grandest expression of this was of some version of America at its peak power, I would say. Somewhat that basically that America at the peak of its power was the ultimate in soft power. That will give away food in Africa, we'll build schools, we'll build roads, we'll give away medicine. And in the process of doing that, we'll enroll more and more countries of the world into being allies or enrolled in the American ideals, whatever those even are. But it's sort of the aspirations are very clear and very beautiful of America, however, the implementation is. And we've now seen China very actively cultivating that same thing, building hospitals in the Caribbean,
Yes.
roads in South America, schools
I'm
in Africa. All this, it's no different, right? Where it's like,
Yes.
do you believe in the Chinese way? Do you believe in the American way? Do you believe in the tasty trade way versus whatever? Um, you know, what is your perspective on both the effectiveness of American goodwill and investment of U.S. tax dollars in goodwill relative to the new, more modern, the current sort of transactional thing, which is why should we give anybody anything? They don't do anything for us.
I mean, obviously, I believe America's right now is on a on a path that's very self-destructive. I believe we're on a path that's very closed, and we're isolating ourselves, and we are destroying hundred years of goodwill. This is one of the things that scares me the most about the whole Trump aura, the whole Trump philosophy about America first, and about just closing us closing down everything from our ecosystem to our social systems to everything else about this country. It is the scariest aspect of it, which for some ridiculous reason, I don't at all understand why people don't get this, and why they think that, why they think it's not important if kids are dying of AIDS in Africa, or there's people starving in places around the world that can't feed themselves and things like that. It bothers me that they don't think that that's our obligation, and it is our obligation. And it's one of the reasons that this country is as great as it is. It's one of the reasons that we have the strongest economy in the world. It's one of the reasons we have the richest economy in the world. It's one of the reasons we have the GDP that, with only 300 and what do we have, 330 million
50,
people,
30,
or
yeah.
350 million people, that we have a GDP that blows away countries that have 1.6 billion and 1.3 billion. What does China have? 1.3
Even
billion.
yeah, and even Europe's 450,
Yeah, I mean,
bigger.
we're talking about, the size of our economy, the size of our GDP, the size of our trade numbers. It's extraordinary, and it's because we've always had the ability to make sure that we are not only just we police the rest of the world, but we also support the rest of the world. That goodwill is the foundation for all our successes, and it's being ripped apart without any concern or conscience right now, and it's extremely dangerous. And I think that, and we're all being incredibly short-sighted because, oh, the stock market's at a record high, so everything has to be great. That's not the way it works. Greed is a horrible, you know, greed ultimately is a killer, and everybody who gets too greedy comes back to earth. One way or another, it doesn't matter. It comes back to earth. We've seen it time and time again, and it scares me.
The thing that I don't I was saying this on overtime, and to this end, people talk about how well the stock market's doing. As far as I can tell, the decline in the U.S. dollar has wiped out the total value, the dollar adjusted value of the stock market's advance renders it unchanged. That basically the stock market's rising in a world where the world is saying that the value of the U.S. currency and the relevance of U.S. economic power is in its fastest decline in decades.
This
Am
is
I misreading the dollar?
No, I mean, this is very true. But I mean, the one thing I'll say about that is that, you know, Americans are very ethnocentric. We don't focus on the value of our dollar. Relative to other currencies, whereas everybody else in the world focuses on because we don't transact in anything but dollars when everybody else has to transact in everything that actually converts to dollars. So, I would also say that there is some cyclicality to the price move in dollar. I mean, the dollar has gotten very cheap, but the dollar had also gotten very, very expensive over the last decade. So where is the happy place? It's probably somewhere in between. And the dollar also tends to be a very cyclical financial instrument. So I do think that the dollar has, two-sided potential, and we could easily see it back in a more reasonable range. I don't think the story. I think you're right with what you said, that the decline of the dollar has effectively, wiped out some of these gains. But I also think that that doesn't tell the true story. The true story is that the decline of the dollar is a reflection on the decline of our goodwill, and I think the two go very much hand in hand. And it's not all there is to it. But I think that the two, you can definitely see the correlation between the two. And I think that the goodwill aspect of what's happening now, the damage that we're doing, both reputationally and the damage that we're doing, as just in with respect to humanitarian services, it's a horrible thing. We are good people, and we are acting like bad people. And that's because the person at the top is a bad person, period. He's just a bad person. When you're a miserable prick, you're a miserable prick. And there's nothing you can do about it. That's who you are. You're just a miserable frickin' prick. And there's nothing else you can do about it. That's just, you are what you eat. You are that person. And that's it. And we have to suffer through that.
I'm trying to think of how to ask this question or express this thought. The two ways to incentivize any change in behavior is some sort of a reward or some sort of penalty, right? You're going to be penalized somehow, some deterrence, financial, social, whatever the penalty is, or financial social reward, right? And I think that the issue with goodwill as a way of doing business, whether it's Tasty Trade or the U.S. government, is that the dividends from the investment of goodwill don't come at the same time of the investment in the goodwill itself. That the goodwill is an upfront cost, and that it takes years to harvest that investment. And so it's easy to say, well, to look at the budget and say, well, hang on a second, we're doing 10 events, we're doing an event every month, it's $100,000 every event. Like, I could save $1 million or $500,000, just reduce the number of events by 50%, and boom, I just made us $500,000 without any apparent loss in revenue, because the direct revenue doesn't correlate to it. Or I can stop giving AIDS medicine to Africa, or I could stop building hospitals in Asia, in rural Asia, and what's the problem? But then when it comes to actually having buy-in from global partners to conduct, relevant multinational activities in finance or defense or development, they're not there. And when it comes time to find software customers, they're not there. But I just think that the biggest issue is with a transactional relationship, both the benefit and the reward and the payment all happen at the same moment. So it's very tangible, right? I'm going to give you this. If you buy the ticket, you can come to the show. And then I can say, hey, Tom, how many tickets did you sell? And you're like, oh, I sold 1,000 tickets at a $50 a pop, and that paid for the whole event. Plus, we made a profit. Whereas if the event's just or I gave whatever Africa $100 million worth of medical, but in exchange I got control of their mineral rights. Whatever, those are all transactions. Um, why is it? Why? I mean, is it maybe it's better to say, listen, if I give you the $100 million, I want your minerals. If I give you the $100 million, I want your oil. Why is it so much worse to go transactional in the Trumpian fashion than to go transformational, where I'll take the upfront cost on the certainty that over the next 50 years, I can go sleep in any town in the world and get anything that I want relative to money, policy, or opportunity.
Well, time will tell. I mean, but history so far has shown that the approach, the the soft power or the goodwill approach has been incredibly successful, and the transactional approach has not been. Now, time will tell this time, this time around, of course, and hopefully the results are, you know, not they're not destructive and they don't take too long to recover from. But that's what scares me the most. If you want to know what scares me the most, that's what scares me the most, because I have probably more experience than anybody in building businesses around Goodwill. I mean, I've never seen anybody do it before. At least we've done it twice. And it is, it's something you can't buy. You cannot buy Goodwill. You have to earn it. It's sweat equity. And I don't regret 1 minute of all the sweat equity that we've put into this, and it buys us, it buys you room, it buys you a cushion. You can disagree with people. There are people out there that say, screw you, I don't like your politics. Okay, fine. But you do respect me, and that's the good thing. And I'm fine with that. And there's people out there that, that are like, you know, I I really appreciate that you've tried. Maybe it worked, maybe it didn't work, but I really appreciate that you tried and it was genuine. I think that goes a long way to building a strong, you know, fundamental foundation to any business or any economy. And I'm not so sure you can buy it back. I just don't know that you can buy it back. I don't know that you can flip the cards over and the next day come in and say, you know what, we screwed up. Here's some medicine or here's some whatever. I'm not so sure it's that easy. I don't know if you could
So
get back the
you're
trust of
saying
people.
that if you build your business or you build your global political power on the back of 100 years of goodwill or on the back of 30 years of goodwill for Tasty, and then all of a sudden you try to monetize it through a series of sort of crude transactions, and then you try to return to the soft power, but there is no return to that, because the foundation of goodwill or soft power is trust,
Sure,
and
of
trust
course.
is built over decades and lost in minutes.
Yeah. I mean, exactly. I mean, are you ever going to, you know, would you trust Wells
No,
Fargo? Would you trust Wells Fargo if they invited you to a free event?
no,
Of
right? I
course
mean,
not.
and we all have people in our lives who've lost our trust for various reasons
Of
in our
course.
personal life that we would
Yeah,
never ever
of
bring
course.
back into our orbit for anything.
Of course. Some people have family members that they feel that way about. Other people have, work relationships, personal
Or
relationships, of course. Absolutely.
Now with geopolitics, it's a little different because it's sort of the realpolitik, right? Where it's like I may hate you and you may abuse me, but I need you, so I'm going to be, you know, whatever I'm going to be. I'm still, it's easier to dismiss a personal or a social relationship than it is a business or a government relationship. But ultimately, I guess the bottom line for me is that the U.S. dollar is where the loss of U.S. goodwill is being reflected right now. And maybe I'm over dramatizing that. To your point, it's a cyclical asset.
Yeah.
It was too high anyway. So I may be sort of, and I'm more sensitive to it because I have a dollar
Yeah.
income and a euro cost. So I'm uniquely sort of aware of it in a way that probably gives me a slightly more distorted, obviously a more distorted sensitivity to that. But I do
Yeah. I
think that
mean,
the dollar is where it is.
if you ask 99 Americans
Yeah.
where the US dollar is relative to anything else in the world, they would have absolutely no idea. 99, 99.9. Just
Yeah.
tell me where the US dollar is relative to something else. It's just a nonsensical question. There's no starting point there. You
Yeah.
might run into a trader along the way that in the 99 or in the 100 people or 1,000 people, but no, nobody would have a clue. So
Yeah.
that doesn't impact you. I just don't that's not enough.
Yeah, just while I've got you, I know we're going to run up on the clock, but a couple of trading related questions because yesterday the Senate passed the sort of big beautiful bill, and the sort of underlying premise of the big beautiful bill is lots of money for the rich. And setting aside, my social moral opinion of the policies, it does feel like a time where it's going to be a money party, where it's going to be where we're setting up a risk-on environment, a liquidity-driven rally, that it's going to be great for crypto, that it's going to be good for stocks. I mean, and I don't think it's going to be good for America over the intermediate and long term. I think it's setting up a whole set of huge social and financial catastrophes. Honestly, it's catastrophic in my opinion. But I think there's a sugar high that comes off of the back of this piece of legislation that could fuel more momentum, especially in all the risk on assets, whether it's sort of the high beta stocks or crypto. And I'm curious whether you buy into that particular thesis.
I buy into the sugar high thesis more than anything else. I am an efficient market theorist. I believe that this will be a very, um, I do not think that much of this is sustainable. I think that um, there is too much bullishness, too much complacency, not enough fear, and this is a sugar high. And I'm very nervous now. Um, More so, anytime that you just, you know, essentially take the let them eat cake approach, it never ends well. And there is under no scenario should we be um, should we be placing less burden on the wealthy. And I'm wealthy. Okay. So it's not like I'm not, not talking my book. Under under no circumstances should we place less burden on the wealthy and more burden on the poor or at least less wealthy and or less fortunate in terms of, how much money they have. And so I do not understand how any of this is good. I feel like it's all also very disingenuous and kind of walks back on a lot of promises that were made, throughout the campaign. I can't even imagine how anybody would have voted for this.
Yeah. I agree. I mean, I agree. The other thing because I was talking to Angeline and Rich this morning in London, I've been doing most of those mornings just as I get to wake up with them and go to
Yeah.
sleep with Chris and Ilya, which just explains how sad my life has actually become. That I instead of waking up and going to bed with a beautiful woman, I wake up and go to bed with Ilya and Chris and Rich. But anyway, this is my karma at this point, so I accept it without any complaint. But we were having the discussion this morning. I think Rich and I were, maybe it was Angeline, about a competitor whose name shall not be named, is offering a offering European customers access to some sort of the superstar U.S. stocks like Tesla via a token.
No, no,
And
on stocks that are not yet uh, public companies. So, for example,
like a
like
SpaceX or something you're saying.
SpaceX or Open AI, things like that,
Got it.
not
Okay.
publicly traded.
Okay. So
There's
I
and
misunderstood.
only to European customers. It's not legal yet. It is legal. Parts of it are legal in the US, but it's never been tested. There's
Okay.
a couple of cases that are currently, in litigation, and so it hasn't been fully run through the.
Unresolved.
Yeah, yeah,
But I guess what kind of struck me about it though was, are we going to move to a world in the next 5 years
yeah.
where instead of, because I mean, as you know, one of the great fee harvesting fields of the entire financial world is currency conversions, where they basically keep a huge book of currency. They charge everybody this huge vig on the conversion. And then at the end of the day, they just net the spread, which might be 2% of the book, but they're charging a fee on 100% of the book. And it just seems like something where tokenization for currency swapping, yen, dollar, yen, euro, blah, blah, blah. It just seems like the token is sort of ripe to replace currency conversion, or for that matter, that the token is ripe to replace various mutual funds or ETFs that sort of are aggregating US stocks, et cetera, et cetera. And my thought in talking to Rich and Angeline this morning was, this feels like one of those that's like never going to happen, never going to happen, never going to happen. And then everything, like horse and buggy style. Do you believe there's a future in the next, I don't know, that in the near future, that tokenization will become the mainstream mechanism for asset transfer across borders and across jurisdictions and across regulatory theaters?
I've been talking about this now for probably 5 years.
Yeah.
And, and I don't want to say preaching, but I've been talking about globalization through tokenization and financial globalization, through digitization. This is just the tip of the iceberg. We've actually looked into multiple offerings ourselves. In the US, it's really difficult. In Europe, there's a little more leeway based on the size of the company, to offer tokenized offerings. I think the secondary market, once that gets resolved, meaning like, so if you were to buy one of these tokenized offerings, like how do you sell it? So there's some issues there. And once the secondary market gets a little bit firmer and it gets a little deeper, and once the number of offerings are become, a lot more common, I think it's unstoppable, to be fair.
It's an inevitability.
It's inevitable, yes. And it's inevitable. I mean, at this point, non-public companies that are, still in the private stage, that are, selling tokenized stock, depending on how you're securing that, there's a bunch of issues. But it taking it to the next level, which is what you're actually suggesting, is 100% going to happen. 100%.
But it's not a
It's
trade. But it's like you wouldn't. There's no trade. Is that why Coinbase is up so much? For
it's
instance, or
why it's why Robinhood's up so much. It's why Coinbase was up so much. It's why, these stablecoin stocks are up so much. If you stablecoin, just what you said, you want to cut the banks out, just everybody goes to stablecoins. Let's keep it simple. And you basically, you go from 100 basis points down to one, two, three, whatever it is, but you
Mhm.
save 97%. I mean, it makes sense. It's going to happen, but the growth of our business is in the derivative space because it's more capital efficient, and none of this is derivative based. So it's not capital efficient yet. So it has limited upside. I think over the next 3 to 5 years, it'll be pretty big.
And then the last thing, which is sort of the correlated but uncorrelated, because I also feel like the transportation tech is going to also have a revolution in the next 5 years. That the same way that we're going to get tokenized, that self-driving vehicles will be the standard within the next decade, and that the owner operated
Sure.
vehicle will be a novelty.
Well, I don't know. I'm not ready to say that the owner operated vehicle will be a novelty. I am ready to say that you might not be taking a black cab in London or a yellow cab in New York City, or whatever color cabs they have in Milan. Um, I
White,
think that
white.
I White. I think that there's a very good chance that you're going to see, public transportation, basically Uber, Lyft, whatever, all forms of, you know, um, uh, just on-demand transportation become self-driving. I don't think that people are ever going to say, you know what, I'm going to take a 60-mile drive in an Uber in a self-driving Uber to go visit my cousin somewhere. So I think that, you know, it's unlikely to have I think we're decades away from it having a personal impact on people and the way that they move around. But inner city traveling, tourism, business travel, oh, 100%. It's going to change everything.
One interesting counterpoint that I was reading, which is a Malcolm Gladwell point, which was the problem with self-driving cars is not that they're prone to make a mistake and run over Granny or run over the dog or do something like that. The problem with self-driving cars is that they have 8 billion sensors on them. And so they actually never make mistakes. And so if anybody ever runs in front of the car or ever steps in front of the car immediately comes to a complete stop, which eliminates the deterrence aspect. So the reason why children don't play soccer on Michigan Avenue is because they know if they do, they're going to get hit by a car. But if children go play soccer on Michigan Avenue, all the self-driving cars are just going to stop. And that you need the deterrence of of crazy Tom Sosnoff barreling down the road, you know, in order to make sure that the roads don't get overtaken by stickball. You know, you could hold up the 405 with a stickball game because all the self-driving cars don't honk. They don't care.
Yeah, like I said, I don't see that. I think you're decades and decades and decades away. I think you're going off the deep end here, Mr.
All right.
Radigan.
Okay. Listen, I had one too many carbonaras.
All right. Anyway,
All
that
right.
was a great talk today. Appreciate it.
Yeah.
And
Welcome home. Nice to have you back in your saddle there.